Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, and I'm your host for The Mortgage Voice. Thanks very much for listening. We're on a number of different podcasts nationally as well as locally. We're on several radio stations, probably right near where you are, KCAA, KMET, K-Tahoe up at K-Ship, and our new affiliate down in Albuquerque, New Mexico. I believe it's KKMIN. Is that correct?
The one in New Mexico is K-Mine, K-M-I-N, and K-M-Y-N, so it's AM/FM.
Excellent, and I want to thank those people down in Albuquerque for tuning in. Try the show out, listen to us. What we're trying to do is get you some information that may be useful. We are not necessarily a local show here in California. The company that sponsors the show, Malibu Funding, is in 10 different states all over the United States. And the people that we bring on the show are people that we try to bring to you as a courtesy, i.e., they're not me. I'm not selling me. I want to help you. And by helping you, we're going to bring on competitors, people in the business, whether it's account executives, other lenders, real estate agents, people in the know in the business that can help you decide what you can do with your particular real estate or your particular mortgage problem. And we're going to do that today, and we're going to do that each and every week. And we're going to try to bring to you in Albuquerque local people that you can trust, that you know, that you can look up, that you can call on the phone. For everybody else who's been with us for many, many months, if not years, thank you and welcome to listening to the show. You can see the show, this show, we videotape it as well on YouTube. Jeff Barton, The Mortgage Voice is our YouTube channel, and we'd appreciate it if you go there. And as I say, we're on a number of national podcasts, certainly Google and iTunes and iHeartRadio. Yep, all the big ones, Spreaker. And so, as I said, we are out there. Thanks very much for listening. Let's get right to a couple of things, news to use. I've been incredibly anxious. And one of the reasons I'm anxious is because, like everybody else, just want to get back to work so that we can get on with life. I don't know if that means that we have to wear a mask. I don't care. I'll wear a mask. I'll wear a hood. I'll jump on a pogo stick. Just let's get about what we need to be able to do so that, one, the economy is better and the 30, 40 million people who are out of work. And by the way, many people in my family also. I have children who got let go. I have brothers and sisters, albeit I'm older, but they're all still working who also. So I really understand it. I'm using the Paycheck Protection Plan to try to help people at the company I work for to be able to keep their jobs and keep their salaries. So I'm very well aware of what's happening in the marketplace. So as I said, the anxiousness that you feel, yes, I feel too. But I can help you provide some solutions, right? There is non-QM, there is jumbo, there are products available in the refi market. And by the way, that refi market is unbelievable. Why? Because rates have continued to stay low. We finally have, after all this time, a correlation between what's happening in the bond market and what's happening with rates. We currently have some rates which are hovering at 3%. The 30-year fixed rate mortgage loans are like that. Now, granted, some lenders are different than other lenders. Some appetite for risk is a little bit different, and some ability to sell directly to Fannie Mae and Freddie Mac is different. But we have a lot of lenders out there who are at 3%. And so if you want, you can certainly call your local mortgage broker. You can call me. We have a guest coming on today who is in the Albuquerque market, who has done a number of loans. He's a big player. So when we get him on, we'll give you his number and give you an opportunity to be able to call him directly. The 15-year, which I've always loved the 15-year fixed. And the reason is because at these prices, based on what you were getting a 15-year for 2 years ago, we can almost, not quite, but almost pay the same amount for a lower rate today, jump from a 30 to a 15 and pay very similar amounts of money. The 15 years at 2.74%. That's up a little bit, but most of these rates that I'm quoting today are national averages. You'll have to go to specific lenders with which to be able to find the better rate or a similar rate. but most of these averages come out to 2.74 at the 15-year. The FHA is great too. 2.68% is an average of the 30-year fixed rate mortgage. And let's see. Okay, so we talked jumbo. Now, jumbo is a product that isn't sold to Fannie Mae or Freddie Mac, and Ginnie Mae is obviously the FHA purchaser of record. The jumbo loans are private label securities. And what does that mean? These terms that we throw about, we don't mean to have you stumble through them to try to figure it out. What that means is somebody has to buy this loan. Malibu Funding is the company I work for, right? We borrow money from a warehouse line, we lend it to the customer, and then the investor, the person who is eventually going to sell it to Fannie Mae and Freddie Mac, purchases the loan from me. This is quite typically what they call a mortgage banker, or somebody who is a broker who is in the correspondent or mini correspondent space. Okay, this is what I am with Malibu Funding, the company that sponsors the show. However, there are other forms, other ways by which that money gets to you. The question of jumbo money is there is no government-sponsored entity. There is no Freddie, there is no Fannie, there is no Ginnie to purchase large amount loans. Now, what is a jumbo loan? Every county in the United States sets those rates based on the median home price or the sale of price in that particular neighborhood or that particular county. So in your county, wherever you live, you have to go to your website, go to any browser and just type in, what is the conforming limits for my county, Albuquerque, let's say, or Las Vegas, Nevada, or up in the Tahoe area. And they will give you the actual dollar amount of what that county will lend to, the limits that they are. Anything over that is a jumbo. Anything significantly over that is what they call a super jumbo. What is the appetite for those particular loans? Many houses in the United States are jumbo loans. So what do you do about it? Well, there are some players coming back into the jumbo space because they're private labels feeling more comfortable of a certain type of borrower. One, it's a credit score. Two, it's the amount of equity you have in the property. And so these two things combined, and obviously you got to have a job, you got to have a way to pay back the loan. So that's like at the base, which means that the 40 million people that are out of work right now, they do not have a shot at getting a loan through any kind of program, let alone a jumbo program. But for those of you who do have verifiable income, a couple of banks you can go to, right? There's Sprout Mortgage, there's Luther Burbank, two of the ones that are in this space currently that have come back into the space. Now you can get down to Chase and Wells Fargo and Bank of America, and you certainly can ask them about jumbo products. If you want to wait in line, if you want to take your time, if you don't have a timetable, that may be the way to go. Some banks that you have banking with, if you have a particular balance over a certain amount, yeah, they'll take you priority. However, if you're not in the private banking group, you're going to find difficulty in waiting in a long line. So usually we suggest going to a mortgage banker or somebody else, especially in the jumbo space. You need production, you need something done now, you've got to go that route. The non-QM space, which also does jumbo loans, but they do it based on lower LTVs, lower FICO scores, and a different kind of structure for valuing or looking at what your employment is, whether it's a bank statement loan, whether it's a business bank statement loan, whether it's other kinds of income that you have. These are the type of banks. So there are, again, no government entities buying those loans. However, non-QM space is slowly edging its way back in. Why? Regardless of Corona, the country is opening. So you will see over the next 60 to 90 days a gradual increase in business activity, which means that people will be going back to work, which means that these types of loans are more secure because of that fact. We're not going to have an overall collapse because people are going back to work. So those two lenders I'll give you, Angel Oak, ACC Mortgage. Both of those companies are doing non-QM loans. Again, it's dependent, and so you need somebody who can get to them with a very successful looking application. Anyway, I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in. Good to be back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to the Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in this week. We are in many different states now. We are growing the show and trying to bring mortgage information, real estate information to as many people as we can. Let's see, we are on 5 radio stations. We are on YouTube, Jeff Barton, the Mortgage Voice. Podcasting, yes, 8 different major national podcasts that we're on, iHeartRadio being one of them. Certainly Google and Apple Music Play and Spreaker. And so you can see us. I know the information can be dry, but if you're driving around right now, which is typically what people do on a Saturday and Sunday, and hopefully you're out and COVID is relaxed a little bit in your area, this is a great chance to get some information that you might need if you want to refinance or if you want to purchase. We bring to the show many different people in many different areas in order to understand what's going on in a certain area. We look to experts in that area, and we found a guy who is at K-Ship, Danny Jackson. Oh, I believe, Danny, you the sales manager over there?
Program director.
Yeah, I'm sorry. I apologize for that. Program director. Yes, thank you. And this is in Las Vegas, Nevada. And again, I welcome Danny Jackson to the show. Danny, how are you?
I'm doing great. It's a balmy 107 here in Las Vegas today. So.
Ouch. I know. You know, I was in the valley, San Fernando Valley in Los Angeles yesterday, 109. Just unbelievable.
Oh, my goodness. Yeah, we're just getting us ready for summer a little early, so we're used to it.
Yeah. Okay. So I wanted you on the show. You have your hands and your finger on the pulse of what's happening there business-wise. People are anxious and cranky and wanting to get to some normalcy, whatever that means for you in Vegas. What are you seeing on the street out there?
Well, we're a hospitality town. We're primarily, a huge part of our economy is hospitality, and
right.
We've been shut down for going on 3 months now. We shut down the casinos mid-March, and it's an eerie sight to go down Las Vegas Boulevard at night. I've gone down with my family a couple of times to see the casinos are dark and there's nobody on the streets, and it's really eerie. It's the first time I've ever seen it in my life, but we got some good news this week. Our governor has moved the state into what he calls phase 2 of our reopening.
Right.
And effective June 4th, casinos, as long as they're compliant with the Gaming Commission and the health department, they can reopen as of June 4th. So it's a step in the right direction. I know MGM properties, Caesars, some of the bigger casinos are planning to reopen. Bellagio, one of them. They're going to open in phases. There's some definite restrictions. There's going to be a lot less machines that you're going to be able to go on. Table games are going to be a little different. There's some stringent cleaning policies that are going to be happening. They'll be taking temperatures when they go in, but things are going to open except for nightclubs and live events. And like your shows, everything else is going to be able to open June 4th. So the city kind of breathed a sigh of relief, just a collective sigh of relief that we're reopening, and a lot of people are going to get their jobs back because Nevada's got one of the highest unemployment rates in the entire country with the casinos being shut down. So good news that some people get to get back to work, and that our number one stream of revenue for the state is getting to reopen. We're just, fingers crossed that people want to come out and actually enjoy some of the casinos. So that's what we're hoping for.
One of the things I was thinking about is that listening on the radio must have gone up during this particular 3-month stretch, right? I mean, people get bored with Netflix. How many times can you watch that before you just want to throw a shoe at the TV? Have you seen an uptick in what you offer and people coming to the station for answers, entertainment, whatever?
At our station, I would say we've stayed about the same, only because we're a sports talk station primarily. So with no sports for the last, 2.5, 3 months, a lot of our guys here that run shows at KSHP, they've been having to get creative, and there hasn't been as much to talk about. But KSHP also has a unique show called the Radio Shopping Show that airs every
Right.
day. Where I liken it to like Groupon, but on the radio. You can listen in and get deals on restaurants and activities. That took a little bit of a hit too because everything closed down, but we've managed to just kind of stay lateral. We've still been able to provide some entertainment on the radio. Our sports talk guys are, like I said, they're getting creative. The shopping show's been creative with our shows every day. So we've stayed about the same, but you're right. People are getting bored. They've watched everything in their Netflix queue
Right.
and they're looking for something else to do and find some form of entertainment. So I imagine radio is probably getting a bit of an uptick right now.
You know, you mentioned the sports teams, and of course, everybody in the country has been following what's happening with the Raiders, and certainly the success of the hockey team there. The sports, Vegas being a different city than it was 20 years ago. The COVID, do you think in particular, this particular thing that happened will affect the view of any major city, let alone Las Vegas? I.e., are people still going to look at Las Vegas as a temporary place, you're in, you're out, or are people really looking at Las Vegas more now as a destination wherever you want to live and raise kids? Because I know the population there has really skyrocketed over the last 10 years.
Yeah, so I have a bit of a biased opinion on Las Vegas and it being a place to raise a family. I moved here with my parents when I was 10 years old back in 1989. And
Okay.
I've been here ever since, and my wife was born and raised here. And Las Vegas is very much a family town. It's a family-friendly town. There's the Strip, and then there's the rest of Las Vegas. And
Right.
I think with all of these professional sports teams coming, we've got the Raiders, we've got the Golden Knights, we have the Las Vegas Aces, our WNBA team.
Right.
And then, the idea of getting a couple of more professional sports teams in the near future. I think Vegas, if it's not already an ideal destination for people to bring their families and uproot and move, I think adding more sports teams and having legitimate businesses and sports like this in Las Vegas, I think that's it's just one more reason to move out here besides 300 sunny days a year.
Yeah, that's nice. I agree. I mean, when you get the snowbirds coming out there, they don't care what temperature it is. It's sunny, it's warm. Yeah, they love it.
Yeah, absolutely. There's great golf. There's a lot to do. It's actually a really great city to raise a family in. And again, the Strip and outside of the Strip are two different entities. Like I rarely go down to the Strip as a local.
Right. Right.
There's so much more to do in Vegas. And Vegas is just a big city with a huge entertainment district that's in the center of it. So, yeah, great place. I'd highly recommend moving to Las Vegas.
Now, let's talk a little bit about the radio station, the reach of the radio station, what your plans are, and what kind of growth you see in your particular area, in your particular niche of what you're trying to do.
Yeah, so we're KSHP has been around since the 80s. I think I can remember it being around since the 80s. It's changed formats, but in the last 20 years, it's stayed about the same, which is sports talk and more. But our flagship big moneymaker show that's on at KSHP and is unique to Las Vegas is the Radio Shopping Show. The Radio Shopping Show is in other markets. We have two shopping shows in Chicago. There's one in Colorado, one in Virginia. And it's sort of like it's a brand. People know the shopping show and they use it when it's in their town. And the shopping show has carried KSHP for the better part of 20 years. About 3 years ago, we were bought by Bill Pollock. Bill Pollock owns the Pollock Companies. He's got about a dozen radio and TV stations around the country, mostly smaller markets, but he's in Chicago, he's in Arkansas, Tennessee, and he also owns a chain of movie theaters. And he's kind of come into KSHP and breathed some new life into the station. He's got some great ideas for ways to be creative with the shopping show. It's not just about being on the radio anymore. We're on Facebook Live. We do things on all our social media platforms now. And it's great to be a part of a radio company that lets you get creative and lets you think outside of the box. And you can take a chance and experiment on a Facebook show. And if it works, that's fantastic. If it doesn't work, back to the drawing board. So
Right.
we're definitely growing. Our reach is all over. KSHP reaches all over Las Vegas. So we pretty much cover the entire Las Vegas Valley. While we're a 1,000-watt station, we're on the internet. We have an app. We have a station app that you can find in the App Store, the Google Play Store, and you can listen to us from anywhere. But our main reach is Las Vegas. But we get a lot of California listeners, a lot of people in Arizona that know about the shopping show, and they'll tune in and they'll listen via the internet so that they can get their deals on show tickets and hotel stays.
Great
and
idea.
That ahead of their trip into Las Vegas.
Hey, Danny, could you shout out a way by which somebody could get a hold of you in case they want to advertise on your station?
Absolutely. So you can go to our website, which is kshp.com, or you can email me directly. It's dannyjackson@kshp.com. And yeah, we're always looking for people that want to do some creative advertising. We do barter, we do paid advertising. We love it all. So yeah, you can reach me anytime through that email or through the website.
Danny, thank you very much for coming on the show. I really appreciate it.
Yeah, thanks so much. Love your show. Love listening to it. You're doing a great job. So I was happy to
Thank you. That's very kind. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in and listening. We're on a number of different stations in a number of different markets. One of the newer affiliates that we have is down in Albuquerque. So I wanted to get right to our first guest from Albuquerque. Is a mortgage broker, a guy who works for a New Mexico mortgage company, and he's been very gracious to come on the show without really knowing who we are or what we do. But he's going to describe to us what's going on in that particular market, and it's Richard Green. Richard, how are you today?
I'm doing great. How are you doing, Jeff?
I'm great. Thank you very much. And I appreciate, again, you coming on the show. I had just a quick question about the differences that you might see between what you're doing in Albuquerque and what they might be doing in other parts of New Mexico in terms of offering, what kind of loans you might be doing there that they don't offer in other parts of the state.
So New Mexico as a whole, for the most part, we cover the state, and you'll find that most programs will cover the state. There are some little city, like Rio Rancho in the Sandoval County has some down payment assistance programs, but other than that, it's mostly the FHA covers the state, the USDA, the VA, the conventional, and then one of the big down payment assistance programs for a state is called New Mexico Mortgage Finance Authority, and that covers the state. So there's not a big difference that I find. I'm mainly in we do loans all over the state, but predominantly our business is in the Albuquerque area, Santa Fe area. We don't, my particular office, we don't do a ton of business in the Las Cruces area, which is in the southern part of the state, but we can help down there. I'm just talking generally my office. So back to answering your question, I see New Mexico, it's one of these big landmass states that most programs will cover the whole state. We don't really have a lot of regionally specific programs.
No, I'm glad you mentioned the down payment assistance programs as being sort of different in terms of what you can do, but mostly all over. What are the big sellers right now in terms of, do you do mostly FHA or are you doing conforming stuff?
You know, we do a real mix of product. I mean, our median house price is $250, and understanding that market and qualifying for that market, we do see a good handful of our product mix here at my office is probably about 20% to maybe even as much as 25% VA. We do a good bit of VA, 5% USDA, zero down in the outlying areas. And then it's probably split whatever that math is between the two, 35% and 35%, if you will, conforming versus is government. And of the government, there's probably a solid 10 to 15% is maybe even as much as 20% down payment assistance programs.
Now, some of the differences that people experience when they go down there from other states in terms of financing or finding out information about properties and mortgages, a little bit different than it is in some other places, and certainly borrowers there know all about it. But the listeners on the show being from other places, can you just describe a little bit about the information that's available and how you go about deciding comps, and how do appraisers go about figuring out value of properties?
So New Mexico, speaking of comps and value of property, New Mexico is always, and still is, what's referred to as a non-disclosure state. And so there has been a lot of data. I know in other markets, data is so readily available of what your neighbor bought the house for and what they even owe on it today practically. But in New Mexico, it's still done via closed sales on MLS. We have a good handful of for sale by owner properties that and real estate contracts that maybe don't get picked up and reported in an MLS. But so it's gotten better though with technology and just all the data. It has gotten more readily available for the automated appraisal. I just got my very first appraisal waiver the other month. And speaking of what that means, folks that are listening, is you don't need an appraisal on a refinance or even a purchase because the database knows that that house sold last year, the one across the street sold last month, and is very familiar with what the market is. And so in New Mexico, it's still real estate appraisers and comps. And then even real estate appraisers will call real estate agents and say, hey, I know you had that listing and I know you maybe sold it on a real estate contract, but what were the terms? And believe it or not, there's still old-fashioned verbal communication. And yeah.
Yeah, you know what? I got to tell you, I still get calls occasionally, but not as much as I used to. I've been in the business many years myself in terms of just real estate and mortgages and just knowing how the process works. Getting a call from an appraiser, it doesn't happen that often, but you're saying there it's standard of how business is being done, which is, as I say, a little bit different.
Less standard, but it used to really be the norm. And it's technology and the databases are filling up, if you will. Of course, Fannie Mae and Freddie Mac have created their own massive databases of property and property profiles.
Right.
And so it's not as much as it has, but it's still an old-fashioned network that you call them up and say, hey, what did that sell for? And they'll help you out.
In the current environment that we have, right, with what's going on with COVID, how has it affected your market? How has it affected the area you live in? And do you see coming out of it pretty quickly?
Well, that's a big, deep breath here. Okay, I got to think about that. So it definitely affects New Mexico as a whole. Albuquerque, we have our big economies are government-based. We have Sandia National Labs, which is a national laboratory funded by the federal government. We have up north, we have Los Alamos National Labs.
Right.
And we have so we do have a decent infrastructure of government work, which is a pro and con. In this situation, it might be a pro because everyone's still at work.
Right.
The con is we have a whole lot of service industry. We have a big tourism, Albuquerque, Santa Fe, Taos. We have definitely a very healthy tourism industry. And then even down in the southern part of the state, we had a huge oil and gas industry. So it's been hard. And I think it's going to take a minute to really recover. I hope I'm wrong, but I think it's going to take a minute to get cranking again.
Yeah, I wish that wasn't the case. And I started off the show today by talking about my own particular anxiety and the anxiety I feel from the people that I talk to, just about, that is, it may take longer. There's a lot of people in my particular social sphere who are out of work for whatever reason, but most of it due to the the issues with the coronavirus.
Mm-hmm. No, we were doing, probably 5 years ago, New Mexico had one of the highest unemployment rates in the nation. And we were rocking. We were doing the best we've done in 20 years, and then this hit.
Right.
So it's I hope leadership can work smart and fast, and
Me too.
we can all work together as a community to get it going again.
Hey, Richard, could you shout out your phone number for those people who need to contact a great real estate, mortgage broker down there in Albuquerque? Did you hear it?
Yeah, say that. I'm sorry, Jeff. Say that again.
No problem at all. Just your phone number, if you could shout it out for people who are listening, driving around right now.
Thank you. So it's Richard Green at 505-292-3200. And I have to probably carry the one and figuring out. I've been in the mortgage business for 25 years. I love visiting with people. I love just kind of talking and walking folks through the process and making the process make sense. And I would love to do that with anybody who's listening that wants some more information about the New Mexico market.
Thanks very much, Richard, for coming on. And I'm going to lean on you a little bit because you're my man down there. I don't know a ton of people, and I love the market.
Love it. Thank you, Jeff.
Thank you very much. That's Richard Green from New Mexico Mortgage Company. I'm Jeff Barton, your voice in the mortgage industry, and we'll see you right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thank you very much for listening to the show. We're also on YouTube. Go to Jeff Barton, the Mortgage Voice. You can see this show as well as hundreds of other shows. Most
You're breaking up, Jeff. Hold on. You're breaking up.
Okay.
Yeah. If I stop this and restart it, the video will take 45 minutes to save. So I really can't do that. We just need to try again. So whenever you're ready, let's start again and get as close to the mic as you can.
I will.
Yeah, I think when you move the computer over a little bit, you're a little further away from wherever the mic is.
It's possible.
Okay.
I don't know.
Okay, just speak up, smile, and do your thing.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thank you very much for tuning in, and thank you very much for listening. Want to see the show? You can go to YouTube. Jeff Barton, the Mortgage Voice is my channel, and you can see this as well as many other shows. Certainly in the last 2.5 months, we've been dealing, like everybody, with the coronavirus and how that affects you, how it affects your ability to get a mortgage, keep a mortgage, or if you're in forbearance, how do you get a refinance if you're either still in forbearance or you want to get out of forbearance in order to be able to start the clock on that 3 months payments you need in order to qualify. Lots of things going on in the mortgage industry that can help you. We certainly can help you, and one of the people that we bring on the show quite a bit to help us understand what's going on is Connie Hernandez from PMA, and she joins us now. Connie, hi.
Hi, Jeff. How are you
Hi.
today?
You know, I'm okay. I'm very anxious, though. There's a lot of anxiety in my Facebook deliveries recently because there's so many idiots out there who just seem to be insistent on spreading lies, and it bothers me. So maybe I should get off Facebook.
Well, you know, that's unfortunate that what goes on Facebook, what goes on all these social medias, it's not monitored or filtered, unfortunately.
Right.
And there's no regulating it. So we can only hope that some way they get regulated a little bit more closely, and then we don't have to deal with other people's nonsense. But on another note, you know, I know it is difficult out there for many people right now. There's a lot of confusion going on, and you're absolutely right. We want to be accessible. We want to be available. I know that I'm a bit old school, so a lot of my clients are used to seeing me face to face.
Right.
We've all had to make a few adjustments, but definitely still be available to help people that need us, especially right now where there's just so much confusion. So
Yep.
on my side, I'm becoming a lot more and more comfortable with our new technology. Zoom meetings are real big for us in our office. I imagine that is a trend across the board with your side.
Yeah, I think that's true. I think what the good thing about this particular situation, it's highlighting the fact that our industry, for the most part, is a originating from home kind of business. It's not like I have a room full of 50 people working. I don't, even though I have well over that working for Malibu Funding, the company that, of course, I work for. Maybe you found it that people working from home have found the transition to really talking to their customers online a little bit easier. What do you think?
I think that it's a progress. It's obviously the newer generation, the younger
Yeah.
allies that I have absolutely no problem with it. They actually prefer it. And those of us have been around a little longer, like closer to 30 plus years in the industry. Of course, we have to move with the times, but it's actually been actually really rewarding to be able to walk somebody through, maybe similar generation as I, to get on a Zoom meeting and be able to still have that face-to-face and
Yeah.
keeping our distance so that we can remain safe in these troubling times. But I know along with technology changes and adapting to different ways of doing business, and we are, of course, in an industry as far back as I can remember, we're able to take out applications over the phone. So obviously
Right.
those things haven't changed. But all in all, really, it's just, as you said, we want the people out there to know that we're here to answer questions, try to keep up with all the everyday changes that are going on in our industry. So hopefully we can still continue to put them in better financial situations.
Yeah, Connie, tell me, what is the major obstacle right now to helping people?
I hope I heard you correctly, because I'm having a little bit of a hard time hearing you. But did you ask me what was the major obstacle?
Yes.
Okay, good. Well, right now, as you know, I'll give you one example of what happened to me recently, which hopefully anybody out there listening can probably learn from this. So recently, I completed 2 refinances. One of them was a cash out to consolidate, which happened right before they were actually laid off. So it was a really big help, because now from 2-income household, it went to 1-income household, and that consolidation of debt left them with just their mortgage payment, and
Right.
they were able to handle the change that happened in their household. So that was a good thing. The other one was an investment property. She consolidated 2 of her loans into one, and now her investment property is free and clear, which now in her case, that's a huge plus, because that's 100% other than taxes and insurance, positive cash flow for her.
Great.
And that was able to ease the burden of what the situations are now happening at this point. So good story, but where I beg people to take caution is that in some cases, when they're calling in to make their payments for their mortgage, these 2 particular borrowers of mine, out of probably somewhere in the neighborhood of maybe 10 loans that had closed within a 15-day period, were calling in to make their mortgage payment. Financially, they were able to make their mortgage payment. Both of these borrowers, they were both offered right off the bat to go into a forbearance program, not realizing that it was their first payment. Now, I know that by saying that, your eyes have probably doubled.
They are.
Right, Jeff?
That makes no sense to me. People want to pay and they're being talked into forbearance. Why?
Exactly. And they were being talked into it because they said it was an option for them. would not affect their credit, which obviously all these are
Of course it does.
Facts that some people are getting this information in the mail from their lenders. But again, if you are able to make your payment, by all means, you should make your payment.
Absolutely.
So the way it was explained to both of them, it was that they should take advantage of it because at the end of 3 months, there may be other options for them. Well, they both called. Actually, let me take that back. They were both put on the list of first payment default.
Of course.
They called and asked if they were okay, if financially something different had happened. But of course, they went on to explain the story. Long story short, I immediately told them, if you can financially make your payment, you should make your payment. There are no guarantees of any other options available to you at the end of 90 days. And it will definitely put you into a credit reported as a forbearance. It may not mark you late.
No
but
question.
It still may report it in forbearance. Therefore, it's still a credit challenge.
Yep. And it will be for many years to come, because anytime somebody looks to them to either refinance or get a credit card or whatever, they're going to see on their credit report they missed a payment or maybe 2.
Correct. And unfortunately, there have been a lot of people are under the impression that if they don't make their 3 payments at the end of the 90 days, there may be other options. And those options may really not be there. And now they may be forced into a situation where they have to come up with all 3 payments at once, which was now through hardship.
Well, Connie, thanks very much for that information. Listen, I got to jump, but I want to have you back because I still think there's so much more information out there that isn't being shared enough with the masses of people. I mean, that story is, I've heard some stories, but not since 2008 like that. I hate that story.
Well, I just hope people, if they need it, of course. I mean, obviously, if there's a true hardship, by no means would I tell anybody not to take assistance if they need it. But if they don't, just a word of caution that it is definitely going to affect your great credit rating, because in most cases, these people have good credit ratings. And just ask for them to be cautious with that.
Connie, shout out your phone number if anyone wants a terrific loan officer over in the Covina area of Southern California.
Well, thank you, Jeff. Can be reached at area code 626-422-2017. That is my direct number. My office number is 626-918-2419. Thank you so much for your time, Jeff.
Thank you, Connie, very much. Once again, great information. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening and watching the show. If you are watching the show, we are on a number of national podcasts, the Big 8 they call them. We're certainly on iHeartRadio, Google, Apple Music Play, Spreaker, several others, and I can't really remember them all, but I apologize for that. But if you want to see us and you're into podcasting, yes, and I saw a great article the other day about the nascent beginning of podcasting. Now, I see Daryl held up to the camera all 8 different podcasts we are on nationally. But podcasting itself has turned into a much bigger deal, and a lot of podcasting out there now, because of COVID, is being tuned into and listened to. This is one of the few shows that you're going to see or hear on a podcast which deals exclusively in mortgages and mortgages related to real estate purchases. I believe there's 4 or 5 of them currently. There'll probably be more. In a couple of the other places that I go and post the Mortgage Minute, which is an offshoot of the Mortgage Voice, which would be either LinkedIn or Facebook or Instagram. These places now have several different people talking about mortgages. There's the CEO over at PRMG who we had on the show. I think it was last week. Was it last week, Daryl? We had him
Yes,
on?
sir, it was. Yes, it was.
Exactly. And then we've also had the CEO over at Nations Direct on. And both of these are terrific lenders, people who lend nationally, but who are speaking both by themselves and who come on shows like myself, like this show, The Mortgage Voice, to talk about mortgages. It's become something of a difficulty for people who aren't working to, one, figure out a way by which they can pay their mortgage, and then how do they tap into the equity in their home if they currently don't have a job. It's a difficult process and a difficult thing. We talked about it, and let's just cover it a little bit again now. If you are in forbearance, if you have taken the route not to pay your mortgage, and there is a commission now out investigating people to whether they really needed to, one, take the forbearance, and two, companies that needed to get paycheck protection program, did they really need that? So both of those things, and of course, this is typical hindsight government. However, let's just deal with the forbearance issues currently affecting borrowers who want to tap into the equity in their home, who want to be able to get the money out so that they have some cushion if in fact this goes on for longer and they can't get back to work. Well, those people are finding it extremely difficult to get work. However, Fannie Mae and Freddie Mac came out with some guidelines last week about how to deal with that particular situation. And here's what they said. They said, if you have taken forbearance, but are currently now paying your mortgage, i.e. you took 1 month off, you're now paying, you need to pay for 3 consecutive months in order to consider that forbearance a non-issue in refinances. They will buy the loans, is what they said. So that's a good thing. So if you're one of these people who thought that they were going to be, in much more dire straits than they currently are, and they took a month off but are now paying and have paid or will be paying for 3 months, I guess it would be next month, you can get a refinance, and that's a good thing. The other thing is, if you in fact have stopped paying for more than 1 month, 2, 3 months, you still can get a mortgage, a refinance, if you come back into the marketplace, start paying your particular mortgage, and have done so for 3 consecutive months. Now, you want to check with the individual lender that you're currently in forbearance with to make sure that they reinstate your loan. That's incredibly important, because the reinstatement will alert those who are going to consider giving you that refi that you are continuing to pay your mortgage. I can't talk today. They will continue to pay your mortgage, but at the same time, you took some time off. Now, there are several other ways by which you can start the gun on your payment again after you've taken the forbearance. One is to pay off the balance. One is to postpone the balance. One is to spread it out over time. Now, in the postponement, you can postpone it till the end of the mortgage and have it tacked on. All of these things are in consideration when you're doing a refinance. So that is a recap of some of the issues and some of the things that we're dealing with in terms of refinances for people. Now, millions of people are refinancing, and that's a good thing for the economy. Most people don't realize, but 1 in 9 people work in the real estate mortgage industries. And there are all kinds of offshoots and ancillaries to that. There's certainly the home inspector, there's the title company, the escrow officer. All of these type of businesses work as remora on the actual mortgage loan or the mortgage purchase or the real estate purchase. So if you're in one of those situations, I totally understand that it's very important for people to keep the refinance and keep the refinance business coming. Rates, as I quoted earlier in the show, are terrific. And if you're out there right now looking for a refinance and you are working, your chances are pretty good that you're going to get one. Check the local county for the conforming rates if you're looking for jumbo. I explained earlier in the show, we've got a couple of jumbo lenders out there, and certainly in your area, there's probably more than you can think about. Okay, now, there was a situation that came up with the company that I work for, Malibu Funding. They're the sponsor for the show. Thank you very much for sponsoring the show. So I had an occasion to talk to one of the loan officers who was involved and is still involved. What happened is this was a non-QM loan. Okay, first thing, non-QM means that they're not being sold to Fannie or Freddie or Ginnie. This is a private equity, a private, finance loan. The person got the loan. Great. They qualified for the non-QM loan. And by the way, the non-QM loan qualifications have really increased if you can find somebody to do it. This person did. Loan closed. First month, they wanted forbearance. This is the nightmare scenario for anybody in the loan business right now, especially in the non-QM space. First thing the lender did is they called up the loan officer and said, hey, your guy's not paying. He's wanting forbearance. What is the story? Okay, so we got on the phone, called the borrower, had the borrower pay the first month. Okay? Now, in the lending business, that first payment default is a big deal, but they've expanded that in all arrangements, all agreements between mortgage brokers, mortgage bankers, their investors, or the lenders. And they've stretched it out now to 6 months. So there's no first payment default that's the issue. It's 6 months. So we now have to go back to that particular borrower for 6 months and make sure that they pay that loan. Otherwise, what is the penalty? The penalty is that everybody involved in that loan is now on the hook for it. And nobody wants to be giving up commission that they made and worked hard for. These non-QM loans are not easy to do now. And certainly the investor doesn't want to get stuck with a loan that they can't now sell. So that particular customer, and this again is the exact problem in the lending industry right now. So understand, it's not just happening to a little company that I work for. It's happening on a massive scale. There's 40 million people out of work. So what does that mean to the local lender at the corner who gave loans out in the last 3 years to people who now have no job? All of those loans are subject to repurchase unless some miracle happens and they all get their job back and they all start paying again. This is the tsunami, the tidal wave, whatever you want to call it, that we feared so much back in 2008 come to haunt us again through no fault of the borrowers. Nobody's faulting mortgage companies. Nobody's faulting policies. What's happening, and again, as I stressed at the beginning of the first segment, was people are anxious. They need to get to work. And the reason they need to get to work is because all this stuff is about to fall down on them if they can't pay that mortgage. Not only them, but the long line of people who are involved in that particular loan times millions. Anyway, I'm Jeff Barton. Sorry for that. That's bad news at the end of the show, but I'm here each and every week to try to walk you through it. And of course, on the Mortgage Minute on LinkedIn and Facebook. We'll see you next time. Jeff Barton for the Mortgage Voice.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.